Welcome to Rising Edge TV. My name is Philippe Gouraud. I'm the CEO of Rising Edge, and I'm really excited to actually host today a fantastic panel to talk about the 5 steps of the life of a D&O policy. So today we will have Lian Grass. Lian, you are a Managing Director for International Financial Lines at Howden. Robert, welcome to you as well. Robert Barnes, you're an account executive at Gauss of London, a wholesale broker in the London market, specializing in financial lines. And also a very warm welcome to you, Ellie, our very own Ellie Fisher, Senior Underwriting at Rising Edge. Welcome, Ellie.
Thank you.
So, 5 steps of in the life of a D&O insurance policy. So we'll go through each of these steps, and the first of these steps is risk mapping. So, Lian, could you please tell us a little bit more? What exactly does it mean, risk mapping, and who does it?
Sure, of course. This for me is the beginning of the policy, obviously, and this is all about client engagement for me. And the risk mapping, I think, starts with us as brokers. Before you go and meet that client for the new business or the renewal meeting, you've got to do some homework on the territory, the industry, and the particular company. They're not going to expect you to walk in there and know how to run their company and everything that's going on. But a slight bit of homework, slight bit of education on what is actually happening in their world really can help to lead those conversations. And the important points I'm always looking for in those meetings is, what can I see that's going to make an underwriter nervous? What can I see to advise them that we need a little bit more colour and clarification around? What questions can I ask them? So that for me is the risk mapping, and walking in there and actually giving them some advice on, what do I see, as in what's happening to other clients in that industry, in that territory, to take that advice into them and actually have those conversations, I think is excellent. It also begins the process of listening. And I think that's the biggest skill that I've had to learn as a broker is we're all too quick to walk into those client conversations armed with all we know from Google, Bloomberg, Advisen, and start telling them what their risk is, start telling them what they should buy and what we think they should do. But actually, to have that information, just ask questions, listen to their feedback, give them advice on the feedback, I think is the most important thing. Setting the task of, what's important to that client? What are they concerned about? What's the board talking about? We're not there. We can only read public information if public information is even available. So just to sit and listen and set the process and understand where the client stands on a lot of that stuff, as a broker, I think that's really powerful. And then it can lead into the conversations of advice. And that's what we're there as brokers to do. We're not there to post box. We're not there to be robots. We've got to provide value. And that for me is advice around their key points that they've told you, key points that you've noticed that they may not even realize they have some kind of red flags or nervous touch points in the market.
And from a D&O perspective, is there any area that is particularly in focus when you do these risk mapping? Are there areas of the company that actually are more relevant for the placement of a D&O insurance policy versus, say, if it was property insurance?
Yes, of course. I mean, you have to walk into those meetings and provide advice thinking like an insurer. What's going to make the insurers nervous? And one of the big things you look at in a publicly listed company is obviously their stock performance. Event-driven litigation, driven by then stock performance drop-offs. Let's have a look at that together. That's one of the big points to start at. How has their share performed over the year? How are investors feeling? What are investors saying? That's a really pertinent point. And then for any company, I think at the moment, what we're seeing a lot of concern around is insolvencies. So actually really looking at their financials, understanding their cash position, understanding what they're doing with that cash, do they need to raise, etc. I think insolvency is a huge part of what's happening. And apart from that, I think the most other common issue we're seeing is regulatory. So how are they behaving? What is happening in their world? Are they under the scrutiny in terms of an industry, in terms of any regulators? So it's those things I'm kind of looking at and talking to them about, because that for me is what an insurer is going to want to hear from me or the client, is those pertinent issues.
Robert, maybe before we start talking about the risk mapping with you, for our audience, can you explain a little bit like what is your positioning in the chain as a wholesale broker?
Certainly. We act as an intermediary between the retail insurance broking partner, for example, in the United States, and the Lloyd's and London market here. So we would work with that retail insurance broking partner to Leanne's point, help prepare the submission, to help map the risk. We'd look at the risk factors that individual client has identified. We'd compare those with what we see in the wider sector. We would also inform on market conditions, claims activity. So in many ways, we are the eyes and ears of the retail broking partner in London for that on-the-ground insurance broker. They would then discuss with the client. At times, we would be involved, not always, in the discussions, in the risk mapping discussions that Leanne has alluded to.
So one question I have actually for both of you is, so risk mapping is now an activity that is almost codified, right? There are methods in terms of like how to kind of engage with the client, and it's actually a good step of corporate governance, and it tends to, for the board, leads to the risk register, right? So how often actually do you have access to the risk register as presented to the board in order to kind of like inform your pre-submission and that advisory step that you're talking about? I mean, do you get access to that document frequently?
No, not frequently. And of course, the London market's dealing with a lot of very large companies who are publicly listed. So actually, a lot of those risk factors are public information of trails and trails and trails of 20F. So a lot of it's there, of course. If not, yes, with other private companies or, not-for-profits, it's not something we get, given often. And actually, in terms of submission, we're not often asked for it.
Interesting.
No, I totally agree with Leanne there. I think that we have to make an important demarcation between the public and private risks that we might see. Private, those are much more involved in terms of extracting the information that the underwriters rightly require in order to adequately underwrite the risk. But I've actually never seen the official board risk register.
No.
Interesting. Maybe something that the market should be thinking about. Now we'll go to then the second step. So we've got the risk mapping done, thanks to both of you, so there's a good understanding of what the various risk areas are. So now you have that kind of like, I guess, a little bit kind of like the raw information, right? Yeah. And now you have to put this in form, and that's what becomes then the submission with which you will go to the market. Is that correct?
Yeah, completely correct.
So how do you do that? What's the difference, between that kind of raw thing? Why don't you just take this whole thing and then just send it to the market? I mean, how do you?
There definitely is. I mean, a submission in its really basic form is a proposal form and some financials. But that doesn't tell a story, does it? This is a personal insurance. This is insuring individuals. And those individuals have personalities and they have culture. And sometimes in terms of that client engagement and that risk mapping, that's the point with the client that you set the journey of the submission. Now, part of the submission could be a client meeting. Now, I don't believe you need a client meeting with every single client, but I've walked into clients before who have either very complex businesses on bits of paper, but they can really kind of clarify what's happening in their world much better than any Google search or Bloomberg can. And those are the clients I want to put in front of the insurers. Also, I have clients with terrible press, bad news everywhere. And you think, gosh, this is going to, need a heavy solution. But actually, again, you can walk into those client meetings. You have got great access to the C-suite. You can see the CEO, the CFO. They talk to you about actually what they're doing, what's going on, and why it looks like it looks. And you think, I need you in front of the underwriters. So for me, a submission, basic financials, basic prop form is for us to then become that client and put some colour around those, those individual items. But I think, again, like I said, this is an individual insurance. Sometimes the best thing you can do in terms of bringing that submission is actually putting the client in front of the insurers, whites of the eyes, let people ask questions, engage. And I think nothing is better than that, actually, that face-to-face contact.
So you put a lot of importance in that client meeting.
I do. Okay. And I mean, look, buying D&O insurance is quite a task, I think. A lot of these people are running very huge businesses and multinational businesses, but they do understand the importance of the insurance, so they will make time for this. And I think that's an important part, actually, is time, is that at this point with a client, when you're putting the submission together, deciding whether a client meeting is the right or the wrong thing, it's actually setting a timeline that works for your client, not that works for you, as in, okay, who do you need to engage with? Who signs this off? How educated are you or the board about D&O? What can I do to help you? At what point from the renewal date do we need agreement? Is it just a CEO or CFO sign off? Is it a whole board sign off? What's the date? So actually working out a real process that doesn't just work for us and isn't kind of post-boxed for everyone. It's an individually tailored solution for the client. I think that works best.
Turning to you, Robert, from a wholesale standpoint. So, as you said, the retailer will have already done the risk mapping with his client, who probably will have prepared a submission, and then in some instances turns to you to access the London market. So here it's a different kind of, like, if I can use the American expression, a little bit of a different ball game. So do you actually reformat the submission to kind of meet the needs of the wholesale market? Is it different, or is actually the submission the same as Leanne would be using in approaching the markets directly?
Well, I guess to answer that, I'd again go back to the demarcation between public and private. If it's public, to Leanne's point, there's a wealth of underwriting information available to the underwriter. What may not be readily available is updates on litigation, regulatory proceedings, any movements on ESG policies, which seems to be incredibly topical at the moment, cybersecurity. Those would be the elements when we look at the actual document that may or may not be.
So sometimes you do push back to the retail brokers.
Yes.
Your submission is a bit weak in these areas. I need to know more about that. My markets will ask more about
100%. To the point that Leanne made earlier, I mean, there has to be some value addition, right, for the job that we do. And we want to present the risk in the best light to the market. And so we've identified certain weaknesses or strengths in the documentation that we receive. And I also think it's a good point. If the client is willing to invest the time in meeting either in person or via Zoom Teams with underwriters, I think we would always welcome that. To me, it evidences commitment to the actual process of renewing what is a critical piece of cover. But I think there's got to be engagement with the retailer on whether or not the submission just meets minimum requirements. You do at times in the wholesale world get requests in that are informational only, right? Mm-hmm. We want to check to see whether London would have appetite for this type of risk. In that instance, bare minimum information is acceptable. But if you're really looking to bind cover for a complex organization, you need to work with your wholesale broker about what the underwriters will ask and potentially ask in a supplemental fashion after they've reviewed the documentation.
So far, we've talked about the risk mapping. We talked about getting the submission ready. And now the underwriter starts to surface, kind of like appear on the radar screen. So now we can turn to Ellie. So Ellie, we were talking here about the all these client meetings, roadshows, and all that. So these are incredibly time consuming. Right? In a day, they can last, and I see you day in, day out attending these meetings on Zoom or actually disappearing for a client meeting somewhere. And I can tell they're time consuming. So from your perspective, because that time is really valuable, what would be the kind of like the tips, or recommendation that you would give to a client in terms of like when you come to, because they themselves make the effort to come all the way to London and also commit their time, and often they're general counsel, CFO, executive of these firms. So their time is valuable too. So what's the best way of maximizing that time in a way that client meeting is really relevant to you? What can you tell us about that?
Yeah, so I mean, we go to lots of these client meetings. They range in length of time. Some of them can be all day, and we see the full client facilities. We often travel internationally to meet clients. And I think you can get real value out of those. Typically, the more informal they are, the better value they offer to underwriters. The kind of presentation of financials or share performance and the information that's publicly available to us, unless they're going to put a new spin on it, we can already research that ourselves. We can already read that. We already know that before we step foot in the room. The real value, I think, comes, like Leanne was saying, kind of looking someone in the eye and asking them the really important questions. Kind of, what is the board talking about right now? How are you planning on spending that cash? Why have you got bad press that's misunderstood? Can you explain it differently to us? And actually, I think the most important bit is to understand the story of the client and the business that they've built, how it's got to where it is, and what their future plans are for it. And to get more of the kind of intangible experience of what they're talking about internally, that's the real value. And I think you can always tell when a broker has already done that research and already had those meetings before the underwriting meeting with the client to prepare them with what they're going to say that could be a red flag to underwriters and how they should explain that and tell the story, so that we don't see it as red flag in our underwriting file.
Interesting. Thanks, Ellie. In terms of the submission itself, so firstly, let's not forget that there is a important legal aspect to the submission, because this is how you are representing the risk to the underwriters. So depending on the jurisdiction of the policy, which insurance law applies, that can have like really important ramifications. But beyond that legal point, submissions and roadshows are pretty much kind of a sales pitch. The risk is being pitched to the underwriters, right? So question back to you, Ellie, in terms of like, when you look at submissions, what information do you feel that is often missing? What else would you like to see in these submissions that you don't see? Or do you feel that these submissions actually fulfill their role, i.e. a full representation of the risk that the client is pitching to you?
I think that really varies depending on the broker and depending on their experience level and actually how willing the client has been to put the information forward. Sometimes, and I'm sure Leanne and Robert will back me up, it can be a little bit like pulling teeth to get the information from a client that we need to fully understand the risk that we're underwriting. Sometimes on the other end of the spectrum, we have a fully prepared submission where it can be 15 attachments, but actually the broker's taken the time and has the understanding to go through and pull out the information that I'm looking for in the first instance to kind of start to get an idea and a picture of who this client is, what they're looking for, what kind of coverage they're trying to buy from us. Sometimes we very much just get a proposal form and financials attached to a blank email. Please, can you provide an option for this? Now, that's really difficult for me to understand the story of the client and why they're buying D&O insurance. Is it their first time buying D&O insurance? What do they actually want me to quote for? Whereas if you kind of have already met the client, you understand, you've had a meeting with the broker, or the broker's even better given you a phone call beforehand to tell you the submission you're about to receive and quickly talk you through it and point out that you should look at page 5 on attachment 4. These things are really, first of all, they save time. And second of all, it helps you to kind of engage with the submission and it become more lifelike rather than just numbers on a screen, which can be a little bit difficult to then understand what you're being asked to provide.
I think you make a good point there, actually, Ellie, because the submission content is one thing, but actually how the broker presents it to you is another. Like you said, you can get post boxes, please find attached, please send me D&O quote, nothing else. And actually, how, as a broker, are you adding value for your client by doing that? How do you think that would, be a great outcome? And I mean, post the COVID world, we've got so used to emailing people, and that's great, it's efficient. But I think if I sent an email myself, it would be a full-on summary of this is what's happening, this is why I'm coming to you, and this is what I need. And these are the pertinent points I think you're going to want. But then you have to follow that up with a phone call. I saw something on LinkedIn the other day that somebody said a phone call is worth 100 emails, but even better, a meeting face-to-face is, 1,000 phone calls. And I think that we really do need to get back to that, because the client can present great information, but then if your broker isn't adding value themselves and presenting that in the right way to the underwriters, I think that lots can be lost in that value chain.
Well, I think the other, and totally agree, I think the other trend that I'm seeing now, particularly with U.S. business, is perhaps a tendency to avoid the underwriting call because everything is in the public domain. I think we need to be really, really careful about going down that road, because I think once you encourage disengagement from the actual cycle, you're making a statement about the importance of the process itself, perhaps the insurance product as well. So my advice would be to encourage engagement. It doesn't need to be an hour-long song and dance that recites basically what's available in the investor deck. It could be a very, very precise Q&A that lasts 15 minutes and gets the underwriter or the group of underwriters all the pertinent information that they just cannot glean from 200 pages of filed financials.
So I think we are now at the end of like that second stage, which is preparing the submission. So now we're entering the third stage, the beauty parade has taken place, the documentation, the submission is on your desk, Ellie, and now the ball is in your court. Another sporting expression there. So the ball is in your court, Ellie. What do you do with the submission? What's the next step? I mean, what do you do?
Yeah, so I think for me then it depends how much engagement we've had with the submission process, but it's then a case of understanding what I'm being asked to quote, what is the risk. I'm very lucky and we're very privileged at Rising Edge that actually that submission and the data and fact finding is done by AI. So that's all done in the background for me, which leaves me and my time free to actually delve deeper to understand kind of who is this client? What are they doing? How long have they been doing it for? How careful are they with their financials? How up to date with regulatory issues are they? How publicly present are they? I think we can all think of one or two directors and officers that are very public, and that is another risk factor. Who are they? What are they doing as individuals? This is an individual policy providing individual cover in some cases. And so you want to understand who these people are and how they work together as a team. What are the board talking about at their meetings? What are they concerned about? What are the press saying about them? Or what are the regulators saying about them, if at all? Are they in a very heavily regulated industry? I think then you start to look at who are these people and who is this client in comparison to the wider industry? Who are their competitors? Where do they sit in the value chain? Where are the issues that could come in there? Or are they in a particularly regulated industry that actually I need to understand that their board of directors have the knowledge and they have the understanding of the regulatory hurdles they could be about to trip over? And so I'm looking at all of that information, and then you're kind of looking at the very solid facts. So you're looking at financials, you're looking at kind of insolvency concerns. As Leanne was saying earlier, it's one of the more pertinent ones, especially right now, but it's also the easiest to underwrite because at least on the insolvency point, at least you have the facts in front of you. You can look at the numbers and you can understand where the client's going. Even better if you've had a client meeting and the client's told you how they're going to spend the cash that's sat on their balance sheet.
Assuming the information is fair, right? There's no kind of like accounting fraud, right? Which is something that you have to do.
That one, yeah, again, and that comes down to looking at who their advisors are, which professional firms is this board dealing with. Do they see the value in paying for top tier lawyers, top tier accountants, or actually have I never heard of the accountants that are working with them? And actually, is that a point of concern for a company with $1 billion on their balance sheet? And so it's kind of looking very specifically at the client, then you're looking out and kind of looking at who their advisors are, who their competitors are, where they sit in the value chain, and actually have they engaged with all those people correctly? Do they have the prior knowledge and experience to do so? Do they have bad press? Because actually bad press can lead to D&O claims in itself, or it can be an indicator that that's the direction they're going in. Or is it a case of it's bad news for this week, but actually the client has already explained the story and the direction they're heading in, and actually the restructure that the press is calling for is already underway, and the board understand that they need to be more conservative with their cash, and that's the direction that the business is now heading in. And I think it's just about understanding who they are, where they've come from, and then where they're going. And beyond that, understanding where they would then sit within our portfolio of D&O clients, and actually looking at the statistics we have available to us, the publicly available information and the information that we have in-house, to compare them then against their peers, both in terms of size, territorial location, wherever they are. If they're a worldwide risk, are we understanding that some areas that they're operating in can be riskier than others? And then you're looking to kind of map that risk against our portfolio and look at where we can get to possibly in terms of quoting. And then it can be back to the broker really to have a conversation around if they're building a larger tower, where do they see our position on that tower? Are we looking to kind of engage at the primary level, and therefore do we need to have a follow-up call with the client to understand all of these issues and start to build that relationship? Or is it actually that there's already been a big tower built elsewhere, and we're speaking to Robert where some maybe 50 million of underlying has already been built in the US, and now we're having a capacity conversation, and do we need to understand whether we can get to the right price that the tower's already been built at? And is that going to be acceptable for us? Do we think it's rate adequate? And so there's two different kind of steps there, whether we're heading down a route of we're building the tower ourselves, we need to look through all the terms individually, and we as a primary underwriter are making those decisions and we're having those conversations with the broker. Or is it a case of we're building a tower, these are the terms as we have them, and then having a conversation with the broker around do we see that tower and where we would sit as rate adequate?
So Ellie, that was kind of like really thorough in terms of like demonstrating, like all the different steps and all the elements of the underwriting process, which to summarize are in two steps. One is like the risk selection, and then you have the risk pricing. Now, if we go back to what we discussed so far in terms of like the risk mapping and preparing the submission, to what extent is that part of information that is delivered to you by the broker guiding you in making these decisions versus other source of information that you may get separately? What percentage would you say you rely on the submission to make these decisions versus the rest, and what is that rest?
Yeah, so I think it's a pretty easy one in the terms of the risk selection piece. We have pretty strong relationships with our brokers. We're very clear on our strategy as an underwriting team. And so most brokers would understand what would sit within our risk appetite. I would say the yes or no risk selection point should be a relatively quick one. I should be able to say yes or no. 95% of the information I need to get to that decision should be sat within the submission. I would hope 100%. That last 5% that I would be looking for is kind of very much is there any bad news that's been hidden by the broker, not been highlighted by the broker? So is there some really bad press currently around this client or their industry that actually means for now it's not one we would want to move forward into quoting? So I would say 95% of the information I would need to do the risk selection process should be sat within that submission. And actually, I would hope that I would be able to do that before even receiving the full submission. It should be very easy for me to say to a broker whether something would be an appetite or not, over the phone, over a coffee, very quick, yes or no. And so I think...
How about the pricing?
The pricing can be more difficult. I think it depends how regularly you see that type of client. For example, biotechs, we see an awful lot of US traded biotech. We're very up to date with where our pricing model would be happy to write those, where we feel comfortable in that space. Different types of biotech, for example, we would know the litigation rates off the top of our head. Some risks can be slightly more difficult. So something that's a new piece of technology, for example, specific areas of blockchain that actually, first of all, I need to spend some time understanding what that client does before I can start to even say yes or no and then look at pricing. But actually, it can be more difficult to kind of understand how that client would fit within our wider portfolio. So I think that can be a bit of a difficult question, just depending on how often we see that type of client, how well we know the client in terms of what they do and understanding exactly what they do. For example, if we had a biotech that are doing some really great work in the oncology space, but actually they're about to add in some cannabinoid exposure or something else that's going to change their risk profile, those are the bits that I'm looking for. So confirming a price takes slightly longer because then you're starting to kind of move down the road of understanding the risk more and doing a deeper dive into the underwriting, both in the submission, but then I would say 50% of what I'm looking at is the submission and the attachments, possibly. And then the other 50% is kind of public domain, what's available. If they're private, then obviously we rely far more heavily on that submission and those submission documents and any conversations we're able to have with the client, just because the level of public information around them isn't the same. For a publicly traded risk, whether it's in the US or in London or anywhere else for that matter, most of that information is publicly available. So I wouldn't be relying so heavily on the submission itself. Once I've received the submission on a publicly traded risk, I understand what I'm looking for, who the client is, and then I'm stepping into the big wide world of understanding kind of what information's available publicly about them. And then the final step is bringing it back in-house and running it through our rater and understanding the information that's available to us, both through kind of what our AI's pulled out from the submission and elsewhere, and then what's maybe what my client meeting notes say, or what conversations have we had with the broker? What should I be looking for in the press? What should I be trolling through their website, getting right to the bottom of this page to understand this bit that the client might be moving into? For example, cannabinoid exposure, if that's something they're looking to go into in the next 12 months, it's absolutely something that I need to be doing a fine-tooth comb on to understand that that's the risk and there's going to be a change. So it's a case of, I guess, on the risk selection point, hopefully that's quick. I would hope that in lots of instances, the broker's already helping us with that, and the brokers are experts in what they do, and their job is to bring the right risk to the right underwriter. So a lot of that job is already done for us. And then, the underwriting process would start into a much deeper dive, probably 50-50 from the submission and from what's publicly available and what else is out there about the industry in general for the client are operating in.
Where does the AI feature in? Just the submission? Yeah,
so the AI for us is a very small part of what we do. It's for us, it's a processing point. It's to enable us to be much quicker, much faster, and have much better data in-house to base our underwriting decisions off. So it's very much at the front stage. When you send me a submission, I would be sending it straight to our AI, which is ring-fenced, it's in-house. That data is not going out into the public space. It's then data scraping for 25 to 30 key points that we've told our AI bots that we would like to see these for a very quick, think of it as like a front page news about this client. We're looking for very quick solvency statistics, where they're operating. It's doing a sanctions check. It's checking the director's history in terms of, are there any sanctions issues there? Have they ever been investigated by the FCA, for example? And so it's just very much a headline news piece from the submission for those brokers who aren't doing that job for us, really. It's done on all our submissions, but the good brokers, I would say that front page news is already their cover email to the submission. But it provides it for us across all clients, just to enable us to take on all the data that we would need to take on without spending lots of underwriter time going through submissions, trying to find these very specific bits of information. The AI would go in and find those for us.
So we're still in that third stage, about quotation, where art meets science. You've used all that data and then you use all your experience and intuition to kind of like decide whether you would select and write this risk and then price it. So now you're going to send that to the brokers. Now we're turning back to you guys. So firstly, form over substance. Does it matter how Ellie sends you that information back? Does it matter whether it's like just an email with like 3 bullet points and a number, or does it matter that actually it's nicely presented with these beautiful graphics that we're producing and spending time to actually put a document in place? Does that document ever ends up on the client's desk? Or does it matter? So first quick question, form over substance, does it matter?
Sure. I think that it's for you to know your clients and your brokers in that instance. So for us, no, it doesn't matter because we're providing very nice white labeled pretty documents to our clients with those quotations in it. So other brokers might not have that facility or might not prepare those pretty quote packs themselves. So they will be relying on yours. So I think it depends on a broker. But for me, no, I just need the information from you of what you would like to do, what your offer is to the client.
Good to know. Robert, how about you from a wholesale standpoint? Because again, you're kind of like a step, between, as you said before, the retailer who works with the client and then the market, specifically here, the London market. So form over substance, what's your verdict?
It depends. And I differentiate between wanting an indication and wanting a bindable quotation, right? So at times we need to assess whether the ultimate insured actually does have interest in the primary or excess quotation. So for us, what's important is speed. And once we get the go ahead, we can proceed to issuing a formal quotation. Similar to what Leanne is saying, we issue the formal documentation and we ask the underwriter to review and sign that off. So from a form standpoint, we like to have control over that to ensure the quality assurance that our retail broking partners expect.
Very good. So form over substance, I think the debate is closed. Now, regarding substance, let's talk about the substance itself. So now you've received the quotes from Ellie and her peers in the market. So how do you kind of like sift through all these different quotes? In terms of to determine, firstly, who you want to select to maybe be the primary, to lead, to be followed, excess? I mean, how do you build all of this? Because in a market like just the London market itself, let's say you have like 20, 30, 40 markets that you may have gone to. And so that's a lot of feedback that now you need to kind of like put in form. So how do you do that?
Sure, I'll just take it back one step. So actually, during these client engagement meetings you're having as a broker, you will set the marketing strategy.
Okay.
You will help them understand what the market conditions currently look like, where their policy currently benchmarks in that, and what they believe that they want to achieve.
So that's managing expectations.
Absolutely so. And once you've managed those expectations, you set a marketing strategy with the client. And the reason I say that is that I still really believe that continuity is super, super important. I think we lost a little client buy-in through the last hard market on continuity. But again, each client on its own merits. You know, if somebody's going through a difficult time, restructuring, transactions, listings, raisings, anything like that, mergers, I would be setting my clients' expectations that you probably need to stick where you are. These people have understood your business throughout this whole cycle. To move now would not be the right thing to do. However, we can always check options. Otherwise, you know, it's setting that strategy with the client and saying, look, these are your current insurers. This is the available pool of other capacity. Let's go and check them. You know, the insurance world is a market. I think sometimes as brokers, what we wrongly do is assume we have the best cover, the best price, assume the insurer down the road doesn't write pharmaceuticals or tech companies or a particular territory. And I think we need to constantly be challenging our own assumptions just to check that we have the right policy, the right coverage, the best premium for the client. So that's what we do. And then we put the strategy in place. We go to the market as agreed with by the client, and challenging those assumptions is something that we always need to do. And I think that, you know, we can all get so driven on price, but at this point we need to be just checking the policy after those conversations with the client. Is where they're headed, is what they're doing, does that fit the wording? You know, are there things we need to change on the automatic kind of basis? Are there things we need to consider in there for them? So actually we need to have both a view on terms, the coverage and the pricing. We go to the market and we receive the quotes back. And then we're going to sit down with the client. We're going to give them the option of their current insurers and their current tower and our thought process on that. And then we're going to present the new options. And you're probably going to say, well, how do you present the new options? You know, what advice do you give them?
How do you present the options? Yeah. What advice do you give them?
Yeah, I mean, it can be quite difficult because we are lucky in the London market. We sit, you know, central to the insurance world, I would say, and we've got some amazing capacity and some really talented specialists. You know, let's not forget, you know, D&O is a specialism. I would like to think we're specialists and so are the underwriters. So it's very hard to pick one against the other unless there's an obvious price. You know, what someone may not have an appetite for, others may at different points, and that's an easy one to look at, isn't it? But when everybody's similar and the same, I think as a broker, you have to bring yourself to the table. And I think through this whole process, that's actually an important point, that people want to deal with people, not robots. You know, having rapport with your client, having rapport with the market, and then back to you. I mean, it just makes everything so much more efficient. The only other advice we can give them on that capacity is obviously rating, but secondly, our own experience with them. You know, something may look shiny and golden and wonderful, but we've had terrible claims experiences with them. And I think as a broker, we need to say that, you know, absolutely, there's not a problem. You'll get your claim paid, but it's really difficult or it's really very slow. And that's part of the job we have to do, and something we're engaging with our insurers about all the time on the claims process as well, because that really does affect things, because that's what they're buying the policy for after all.
Robert, the wholesale market is a different animal, right? All on itself. I mean, you said it early on, one of the key criteria is speed, because the reality is that you're also competing with the retail in whatever jurisdiction it was. I mean, you mentioned here more about the US, but it could be any other retail market. So it's really speed. So other than price, how do market differentiate themselves other than speed and price? Is there any way that the market can differentiate with you, or this is really kind of the rule of that game in wholesale, speed and price?
Well, coverage. I mean, coverage, I think, is paramount in something as sophisticated as D&O. Leanne mentioned earlier claims. What is the claims handling like at that insurer? What is the underwriting team like? What's their continuity in the space? There might be other objectives that the client has identified in that sort of renewal strategy that you agree. They want geographical diversity in their program for a variety of reasons. So it's a multifaceted decision typically. It's not generally just go with the cheapest price and job done. This is, again, part of the conversation that you'll have with the retail broker about where you will slot in. What I would say is that the underwriting continuity, their familiarity with the client in that space, in that territory, is very important, right? So they'll want to know that there is commitment from that insurer to said territory, right? That it's not just a 1-2 year type gamut. And that is something that they would look to the London broker to advise upon.
So now you've received all these quotes from the underwriters. You sifted through them through different lenses: cover, service, pricing, reputation, etc. You sit down with the client. You guide them together, I guess, to come up with like the placement decision. And now the decision is made. So it's binding time. How does it work actually? In terms of like, if I go to a coffee shop and I get my coffee, this is pretty clear. I get my coffee, I paid, I know this is now my coffee. How does it work in the world of insurance, when you actually bind? Like, what does it mean?
It probably is going to sound quite antiquated, actually, because there's not like a magic button you press on something and suddenly all these different things pop up, cover bound, cover bound, cover bound. It's actually quite a laborious task that you will then have to contact each underwriter separately, confirm to them full policy terms and conditions, and let them know they have the order and ask them to confirm cover. That can be done on an email. Some insurers produce a binder at this point, so more of an official document. As we're sending these emails and receiving these confirmations that cover is bound, we're preparing the actual policy documentation behind the scenes. That then, the Holy Grail is pre-inception, but not all orders come early enough pre-inception. So you get the slips done, and then they're put on to electronic placing systems that exist in the London market and are signed off by underwriters. Can take a little bit of chasing, but for you, we have to be onto that. That's how it works.
Is it similar in the wholesale world?
Yeah, just to back up one step, I'd say, try very, very hard to ensure that any subjectivity that is outstanding has been satisfied prior to binding. I think that's something that frustratingly we sometimes see as sort of the lagging answer to a subject to item. So assuming that you get everything tidied up, I'd say very similar. Again, speed is really important for us. So we work off of basically a draft policy. So as soon as we get the bind order, the underwriter confirms, and we put it on documentation on PPL for signing. So there's that traceable audit trail.
Very good. So now we are reaching the fourth stage of the life of a D&O insurance policy. We've bound cover. If we're lucky, if you're saying we even have an insurance policy that's been issued and all that, but let's take this for so we're there. So we are in that phase, which is the policy period. Mm-hmm. Right? So Ellie, is that when you go on holiday? Then that's it. You wait for the next renewal.
Fingers crossed, go on holiday.
Cross your fingers. Is there anything that happens during that policy period from your perspective?
Yeah, absolutely. I think obviously we sign up for partnership with these clients. We have them on our book, and we have a responsibility to be making sure we're up to date with any new changes with them, with their industry, with regulations in that space, and to make sure that we understand the journey the client's going to go on throughout those 12 months. We don't want to get to a position where we get 12 months down the line or 11 months down the line ready for a renewal, and actually the client looks completely different to the client that we underwrote last year, and we didn't know any of those changes had happened. In some instances, there's coverage points that need to be changed. For example, if there's a raising and the broker needs to speak to us about making sure that raising is covered, or whether new cover needs to be put in place, or if a transaction's taking place or a restructure. And actually these have fundamental changes to how the coverage would operate. So for us, the broker and the client, it's important to make sure that everyone's monitoring that so that coverage remains appropriate for the client as they currently look. 12 months can be a really long time.
So, Leanne, how do you ensure then, because what Eddie is saying is that the cover is fit for purpose at the time of binding, because the risk has been fairly represented, the underwriter knows what he or she has been underwriting, so that's fine at the first day of the policy period. The risk may evolve, may change through the policy period. So how do you do to ensure that that information ultimately ends up on the desk of the underwriter saying, hold on a second, things have changed, we need to kind of like adapt what was fit for purpose day one, but may no longer be fit for purpose on day 180.
Yeah.
How do you do that?
A lot of that comes back to relationships and rapport, as in knowing your client, forming a relationship with them, understanding how much advice or input they want. Some people really don't want to be, risk managed by us during the year. They want to be left alone. Other people want permanent check-ins. So we would always do a post-renewal meeting with a retail client, talk about what happened, what they need from us. Do they need a board pack? Do they need any training days with their management team on the D&O policy and what to do, when to do it? But then we're constantly, as brokers, I think, watching our clients, especially the more publicly listed ones or larger, more multinationals that, the press are picking up on, and just keeping an eye on what's happening. Now, if they don't call us first, we're calling them and saying, look, I can see you've just sold. I can see you've just bought. Companies are permanently evolving. They don't stop for 12 months, do they? Things change. Wordings try and pick up most of this, but there's, a lot that doesn't. So, the best thing for me is, I have some great personal relationships with my clients. They can quickly WhatsApp me, Leanne, what do you think about this? Yep, let's go to the underwriters. Let's get them to note it. It's covered. It's not covered. Actually giving that specific advice is where we add value. And, things happen, don't they? People get bought. People sell, people go through transactions, things go wrong. So actually we're always there, and I think always watching. And I think, again, that is down to client relationship as well.
Can someone walk me through our industry, how it works when it comes to maybe paying for the product? What about premium payment?
I think that depends on your client and your broking house, really, and their own controls in there. I think most clients want to pay their premium. I think it's embarrassing if a client chases you up to pay their premium. So it's for us to get the documentation out on time and correct. I mean, that's the worst thing. If you're thinking we're dealing with some huge multinationals with huge tax schedules, it's not one premium, one tax, there you go. I mean, that would be utopia, but most are not. So it's complex. And sometimes you will have other offices paying premium. So each depends on its own concern as such. But then I think, your broking houses, and you'll know this better than me, some are great at paying business because they probably have tight credit control concerns, and others don't. I mean, I think there is a huge demographic in between the two, to be honest. But we're definitely on it.
Very good. Eddie, back to kind of like that policy period. I mean, Leanne touched on an important point. I don't think that there is a client that would not want to pay the premium. Of course not. But there seems to be a lot of dragging, in terms of administrative task post-bind that tend to be kind of maybe not appreciated in the wider world. So can you tell us a little bit more in terms of like some of these intricacies? The job is not finished by the time of accepting the order, right?
Absolutely. So I think it's, as Leanne said, you're receiving a whole huge tax schedule for, it could be almost every country in the world for some clients we would operate with. And beyond that, it's specialist cover in place, and it's done with it can have a lot of markets involved. It can have a wholesale broker and a retail broker and a client, and everyone needs to be communicating across all of those points to make sure this documentation in the first instance is correct, because actually none of this gets processed for payment until that policy documentation is correct and represents exactly the risk that the underwriter has written and the coverage that they're offering to the client under that policy. So all of that has to be done. There's electronic stamping systems that need to be in place, which would involve every underwriter in the market stamping those risks before they go off to be processed for payment. And then actually on the other side, we're very lucky to see it in such a small team. Actually, we sit with our COO and FD who's talking through the intricacies of how these are then paid. And actually, like Leanne was saying, you can be getting payments in from multiple different offices of the client all around the world, and making sure that things line up and the tax schedules are processed correctly. And at the minute, most tax schedules are still done on both sides, on the underwriting side and the broking side. They're still done by a human typing the countries and the percentages out and knowing the tax rates. And so there can be issues there. And once one of those numbers doesn't align, you can end up with a bit of a backlog on payment, even if the client is ready to pay, willing to pay, the broker's ready to go, and the underwriters agreed it. Actually, you can get some intricacies that can stall it there. So it's just a case of accuracy being key on all pages of this documentation for all layers in the tower.
Robert, is your life as a wholesale broker easier than Ellie's and Leanne's?
Indeed, it is, because most of our insureds, ultimate insureds, accept the fact that markets apply premium payment warranties. They endeavor to pay as fast as possible, but no later than 30 days typically. So I think that there are mechanisms the market can do to make what should be the best part of the process more efficient for everyone. But no, it can be quite cumbersome, I think, on the retail side. I do recognize that from my past life.
So this is like the fourth phase, right? It's a policy period. So what I think we've learned from that is that firstly, it's not at the point of binding that job done and we can put something in a drawer. There's still a lot of post-bind activity that is taking place, and that actually could benefit from a better use of technology. And certainly a lot of us in the market are working on this. And the second aspect is that, no, don't put your policy in the drawer. From what I hear from you is that stay awake, right? I mean, as underwriter, keep an eye on the client, keep an eye on the industry, keep your finger on the pulse in terms of what is changing. And as a broker, stay engaged with the client to make sure that any changes that may actually affect the effectiveness of the policy is actually reflected and communicated back to the underwriter. So that document really stays alive for that, and then it should make a smoother renewal to start with. So that's the fourth phase. But sometimes things happen during the policy period, and that's the first kind of stage. Not for every policy, but I mean. For a lot of policies, I mean, something happens during that policy period. Yeah, so something happens during the policy. So what is that?
A claim.
A claim. Welcome to the fifth phase of the life of an insurance policy, the claim. So Leanne, you prompted this, so tell us about it. What happens?
Look, I think, again, this is good client engagement and staying awake. And it's one of the things that I talk to clients about all the time is that, every client probably thinks they're never going to get one. This is just so you can sleep easy at night, all of those different things. But things go wrong. They can go wrong quickly. And most claims I see, you can afford and see coming. You can underwrite around insolvency, etc. But event-driven litigation, regulatory, lots of things you can't see coming.
Is it necessarily a claim?
No, not necessarily. And that's what I always tell my clients is I don't believe prudent insureds get punished. As in, call us, let's speak to the market, let's speak to the underwriters, come to us for advice. Anything that's happening that you think is coming into the D&O world or you think might come into the D&O world, let's talk about the bond restructuring you're doing. Call me up, I will give you advice. If you're having some layoffs, call us up. Let's talk about it. We can give you advice. Most brokers have great claims and legal teams that can just talk a client through what they see go wrong in those processes. So, and I don't believe there is, an area where a prudent insured gets punished in this world. I can come to the market and say, look, they notified 2 or 3 things last year, but as you can see, they aren't anything. They're now closed. But a client that can communicate claims early before it is a claim, I think is a golden client. Because actually, I think the biggest problem the market has with claims is late notification. And that is something that always is putting us and clients on the back foot, late notification. So if you can show that a client is engaged, is thinking about their exposure, is managing it, and is actively communicating and taking advice on it, I think that's a great golden place to be.
Robert, I mean, just in the previous stage, during the policy period, you admitted that your life is easier than Leanne's, but in that fifth stage, it sounds like actually it might be more complicated because you're one step behind, and yet these late notifications to the market that you've engaged with are equally important. So how do you actually kind of stay tuned with all these notifications that may or may not evolve into claims, but which the underwriter, such as Ellie, is dying to hear about in due course?
Sure. So quickly, the admission was in relation to invoicing only. So no, joking aside. So look, 2 things, right? Is it a circumstance, or maybe even to Leanne's point, is it information only, right? That a prudent insured, wishes to make his or her markets aware of, right? So then, is it a circumstance? if it's not, is it a claim? And that's really that rapport, that discussion with the retail broker about what ought to be notified, subject to the terms and conditions of the policy. What I would say is that you then have, in my experience, two batches of clients, those that like to disclose and are very comfortable with that process, and that there are those that perhaps take a bit more of an aggressive tact on its litigation. You knew that this sector has 25% of all securities class actions as an example. It's in the public domain. So there are some differences in the client, in my experience, in the client profile about how they approach notification. Whatever that is, they do expect the broker to be engaged, and that's the whole value chain. So the wholesale and the retail broker are involved in the conversation about what we need to notify, and then the process once the notification is made.
Eddie, from your perspective, what happens in your world as an underwriter when our claims unit led by Owen Dacey, they receive a notification? So what happens from an underwriter standpoint?
I mean, initially, the reality is not a lot happens from the underwriting standpoint. There's absolutely a conversation between usually myself and Owen. If it's my client, we'd be having a conversation just to understand. I mean, I've got the backstory. I know who the client is. I've met the client in lots of instances. I've done the research. I understood the risk that we were stepping into. So it's a conversation with Owen just to update him on that. He wouldn't necessarily have awareness of who all our clients are until that notification comes in. So it's a conversation around that. It's a conversation around if this is something that we maybe foresaw coming, or as Leanne was saying, in lots of instances, you can't foresee these issues coming up. And so it's a conversation then with Owen around what understanding we have of the client, who they are, their risk profile. And then Owen, on his side, he's an absolute expert in these. So he will take that information away. He'll take it away with the notification, and kind of compared to ones he's seen before, he may know the lawyers involved, he may know how they operate, he may understand the direction that this is likely to go in. And so he will then look on his side to begin opening a claims file, looking at kind of what kind of notification are we talking about here? Is this very much a circumstance where the client's very prudent and we have 3 or 4 of these a year on clients with these, and actually it's nothing to worry about at this stage, and it very much is just a FYI, and we need to keep an eye on it, and they'll let us know when they've got more information, or actually is it something that he needs to take more immediate action on? And he's an expert in this space, and he can very much take an opinion. He'll speak to lawyers where necessary and have their opinion too. But it's a case of fact finding then, in terms of what information can we find out about this claim, and what help does the client need from us?
And these, it's important to note, these can be highly emotive claims, right, if they involve individual insureds. And so part of that discussion can become very intense, particularly when you get to selection of defense counsel. But I think underscoring it is that we deal with very sophisticated counterparties that are accustomed to the fact that these are complex, long-running matters if they are, in fact, substantive claims.
And I think you're hitting like a really important point. It takes a long time to go through the entire process of a claim. So here we went through the 5 steps of of an insurance policy, and claim is only one step in these 5 steps, but it's probably the one when it occurs is the longest. And that, I guess, it ties back to some of the points you were making, Leanne, in terms of the loyalty vis-a-vis markets in the long run. So 5 steps. I want to really thank our panel here to kind of having guided us through these 5 steps. But before we finish, any closing remark from you in terms of like anything that we've misstepped in between these 5 steps?
No, I think I'd probably just like to summarize and say that actually when you're talking about out loud about some of these steps, they sound really antiquated and, inefficient, and some of them are. But I just don't think we can take the human out of the chain, because this is an individual coverage and it's a specialist coverage that therefore you need a specialist broker for, and therefore you need very experienced and specialist underwriters. And actually, yes, there are some parts of the chain around tax schedules or general administration, but the way I see this whole chain work best is when there's a great relationship between all 3 parties, being the client, the broker or brokers, and the insurers. That's how I see it work best.
Robert?
Well, totally agree. I would also say this is not one and done. So maybe just 2 follow-ups. I mean, once the policy is bound, I would say if it's an overseas client and they happen to be in London, informal meetings are the best. Make time to meet with your partners and discuss anything that might be on the go at the moment at the company. I think those really are some of the best touch points within the cycle, not necessarily the scripted renewal meeting. And then the second point, just follow on, goes to claims. And I think it's that real importance of selecting particularly the primary partner that you have, hopefully for a long-term relationship. Because that immediate reaction that you get when the notification comes in, you as the broker will know what to expect from an Owen Dacey versus someone else.
So invest in your relationship on a long-term basis.
Correct.
Eddie, from your standpoint.
Yeah, it's funny. I think I was going to make exactly the same point as these two. Really, this is a coverage that's for people primarily, and actually the best way to facilitate this life cycle and to continue it on to renewal next year and the year after that is to make sure that there's plenty of contact and communication between all 3 parties and making sure that there aren't any surprises moving down the chain, and that it's a team that works on all of these things, and actually the communication between the individuals involved in the life cycle of DNA policy is the most important.
So on behalf of the entire Rising Edge team, and I'm sure of our audience, I want to thank you again, Leanne, Robert, Ellie, for your participation today. 2 quick closing remarks. The first one regarding if you want to know a little bit more about claims, I invite you to follow the podcast that our head of claims is actually hosting, Owen Dacey. You can find them on our website. And maybe my personal closing remarks is, as Leanne was saying a bit earlier, a lot of these steps still seem a bit antiquated. So I am just wondering, what the future is going to look like in that space when you consider indeed increased use of AI, increased use of data, increased use of technology, increased use of different type of insurance technology, such as parametric insurance. So what is the D&O insurance going to look like? What is going to be that life cycle maybe in 5 or 10 years' time? But that's for another time. So follow us and come again. Bye-bye.